Hi everybody, Joe Conroy, Certified Financial Planner. Hope you're well, and if you're nervous about investing into market highs, kind of like what we've experienced, I've got a story for you. So recently a client of mine sold his house for around $500,000 and just kind of sparked the conversation. I said, Mr. So-and-so, how long have you lived in the home? He said, over 30 years, just about 30 years. And I was curious. I said, do you remember how much you paid for it? And he did know that he paid the highest price at that time for a house in that neighborhood. It was a record high price. And when I pressed him on what the number was, he said, you know, Joe, I really don't remember. It's been so much time, maybe $100,000, maybe $110,000. So that ended up being a pretty good investment from 100 or 110 up to $500,000. So what does that have to do with the market and all-time highs? Well, people are nervous now that we're at 34, 35. Next up is 36,000 on the Dow Jones Index. And I'm not suggesting invest in the index, but just as a measuring stick. If you're nervous about investing at those levels, let's think about the money that you'll have 30 years from now. Even if you're retired, you hope to have money for at least 30 years, and hopefully you're with us for 30 more years if you're watching. The point is, if you're buying in at whatever the level is, 33 to 36,000 or even higher at some point, the importance is that you get the money in and you keep it invested. 30 years from now, I think you'll be very, very happy that you did put the money in, and the entry point really won't become as important as it is today. Not saying it's not important, but just not as important as people might think it is. Just like, did you pay 100, 110? Don't really remember, Joe. All I know is I got a check for $500,000 at settlement. So hopefully you find that story helpful, and as always, thank you for watching.